So, without further ado, let us start with the first presentation today, which will be shared by Wood Mackenzie's Principal Analyst for Distributed Solar for Europe, Juan Monge. Juan will discuss the scenario for C&I solar PV in the next decade from a European context. Welcome to TaiyangNews, Juan.
Thank you very much, Anu. Thanks so much for the opportunity to present our latest views on European C&I solar. And good morning, good afternoon to everyone, wherever you are. It's a beautiful day here in London, so I hope we get to enjoy this session. Just gonna share my slides. First of all, like I said, I'm based here in the UK in London. I am responsible for Wood Mackenzie's coverage of the distributed PV, the entire distributed PV space in Europe, which includes not only C&I solar. Like I was saying, I'm responsible for Wood Mackenzie's coverage of the distributed PV space, which obviously includes residential solar as well as C&I solar, and collective self-consumption, energy communities, collective residential PV, you name it. There's different names for the same thing. But we all know what we're talking about. I want to specify that this presentation and the outlooks that I'm going to be talking about and explaining today not only refer to specifically commercial and industrial demand. At Wood Mackenzie, these European outlooks are part of a much larger global solar publication that we put out quarterly. And that means that we need some harmonizing when it comes to the segmentation of the entire solar value chain. So we segment by system size, which means that in the case of C&I, we have the commercial segment, which you will see on all my charts, and that is covering any installations from 20 kilowatt peak to a megawatt peak, so a huge range in terms of system size, as well as industrial, which is between 1 and 5 megawatts peak. Now, energy communities or even collective residential installations for apartment blocks would be included within the commercial segment. So that's important to note, because even though that's not a specifically commercial demand, or it doesn't have to be, as we know, a lot of energy communities are servicing dual demand, so both commercial and residential, and probably that's what makes them really interesting. But as you all know, like that, besides that example, some collective residential installations, which will definitely be larger than 20 kilowatt peak, are definitely included in this commercial layer of the segment. So I did want to start by specifying that. I'm going to be taking some time to, first of all, present the regional outlook, which you're seeing on the screen. That aggregates our entire view. It's not all of Europe, because we do not have a segmented forecast for every single European market. Bulgaria, for example, is missing from this chart. So is Croatia and some other Balkans markets. But it does give you, I think, a very full and complete picture of the continent, because obviously we're covering every major market, from Germany, Spain, Italy, France, Netherlands, etc., Poland, as well as some of the really emerging markets like Romania, Hungary, Portugal, Luxembourg, etc., etc. You have the details there on that footnote on the slide. So what do we have here, really? Well, a tale of growth. Not explosive growth, definitely not the level of growth that we have seen in the last 2.5 years, with the boom that was really sparked by the increase in retail rates and everything that was happening in Ukraine with the Russian invasion, but a lot of robust, consistent growth throughout the decade. Now, of course, and I will present some country-specific outlooks later on in a few minutes. But when you look at this regional view, there is a little bit of flatness, definitely. There's a little bit of a stagnation in the next couple of years. That is entirely correlated with what's already happening with the decline in retail electricity rates and the expectation that these are going to continue declining for the rest of the decade, really, and stabilizing. We don't think we're going to see the booming or the skyrocketing electricity energy prices that we have seen in the last 2 years. That is a fundamental thesis, really, and the basis for this forecast, and why it's not as explosive in terms of that rate of growth as what we've seen in the last 2 years. So that's really important to note. I work very closely with a different team of Wood Mackenzie, which is our European power service. They're entirely dedicated to forecasting wholesale market power prices. They are working on a retail rate forecast, which incorporates obviously all the T&D charges, any notions of whether a government is subsidizing retail rates or not. So it's really important to have that retail rate specific view. But since we're already working on that, and we don't necessarily have the specific retail rate numbers as a forecast, using that wholesale market price curve, it's still really useful. It's still fundamental. Obviously, rule of thumb, most markets we're talking about 45% of the price structure or the price breakdown of the full electricity bill. I will present that forecast for wholesale power market prices on the next slide. But in addition, in essence, an annual average growth rate of 5% in the next 10 years. That's the message that I really want to hone in. That AAGR really varies depending on the market. In the case of the UK, for example, it's almost twice as high as that. In the case of Germany or the Netherlands, more saturated markets, not only on residential but also on commercial, that AAGR it's lower, of course. And then we're obviously talking about rates of saturation and simply industrial power demand, which is another very important driver in the forecast, or a barrier, I must say, because obviously industrial demand growth, the way our power team is forecasting it, and based on all the fundamentals that we have, and based on the integrated power model we're using, which is also incorporating forecast for electrification, both for heating and transportation, we know that that rate of growth at a commercial, at a retail, at an industrial level, it's definitely not comparable with other global markets. Even the US, right, which is seeing a much higher rate of reindustrialization than Europe is seeing, because not only because of the IRR, but multiple incentives, everything that's happening in the southeast part of the country, with the battery park, et cetera, and of course when we compare the rate of industrial growth, and this is from an electricity demand growth perspective, with APAC or with parts of Latin America, of course Europe also pales in comparison. We're also talking about the most decarbonized continent in the world, and that's really, really important to note as well, right? There's only so much more room for growth, even with the European performance of Buildings Directive, which we're going to be covering in detail today. I think not only on my presentation, even with all the incentives we're seeing at a national level, and of course, even with this idea of hedging against price volatility, right? When I was looking at Q1 2024 numbers, when I was finalizing this Q2 update for the Wood Mac forecast, like I said, not only I focus on the commercial and industrial segment, but I'm also covering residential. So it's always really interesting to see how things are moving on both sides, right? And one thing that I will stress is that, of course, residential tends to be, and it's definitely, I would argue, a lot more sensitive to variations in retail rates. In the case of residential, and in the case of very, very important markets like Germany or Italy or even the Netherlands, or certainly Spain, like it was happening for the largest part of 2023, we are seeing a more profound decline in residential PV installations, definitely in the double digits. That is not the case when it comes to C&I. We're seeing a decline for Q1 numbers. I've been noticing that trend not only on officially reported numbers from energy agencies or national solar associations, but also when I'm talking to C&I developers and when I'm asking them about their pipelines for the next 6 months, right? So there's a clear trend of the acceleration in the near term. It's entirely related with what's happening with electricity bills. But it's not as dramatic a drop as what we're seeing in the residential space. And that's why that idea of hedging against energy price volatility is really important. And we definitely know that it's a fundamental value prop of C&I developers when they're talking to their corporate off-taker clients. And it's this idea of hedging against volatility, not just on a year-to-year basis. So not just kind of casting a shadow of doubt over any electricity price forecast in the industry, which they do well to be skeptical, but also against the idea of hedging against seasonal volatility. Because of course we could have like an average yearly price of whatever euros per kilowatt or per megawatt hour, but that could be a dramatic shift in the winter, perhaps, when natural gas prices are really spiking. And we know that most of the European markets are really still exposed to natural gas prices. I feel like I'm talking more about the slide that's following this one, but before I flick through, I did want to stress, of course, the other chart that you have on the screen right now. Over 200% growth for your total installed capacity in the next 10 years. So basically, this current view from Wood Mac, and based on the best of our ability to really model the next 10 years when it comes to the C&I PV space in Europe, we are seeing a tripling, a threefold growth of cumulative install numbers. And again, that's everything from 20 kilowatt peak to 5 megawatt peak, that it's behind the meter, that it's not connected to transmission line, right? If that excludes, and this is important to note, that excludes any installations that might be perhaps 3-4 megawatt peaks, but that are connected directly to transmission line, and that therefore are de facto a utility scale installation. So that's important to note, because this is a very specific view on behind the meter. So robust, very healthy growth throughout the decade, and I would argue definitely a little bit more exponential at the residential PV segment. And I know that we discussed that yesterday, and today we're focusing on commercial. So moving on, just some graphs to really illuminate a little bit on what I was saying before on the wholesale market power prices. That chart on the left side of the screen, the bottom chart, that is our latest view from Wood Mac's European Power Service on our wholesale market power price forecast for the major European markets. You can see that that huge skyrocketing growth that we saw in 2021, 2022 has already pretty much returned back to pre-crisis levels. And of course, how this will translate into retail rate price formation, it's a different story, but we know that rule of thumb, we're talking about 40-45% of that entire electricity bill. So obviously, the full price is definitely going to follow this trend when it comes to first very intense declines and then a stagnation. So that's really important to note. And in fact, my country forecasts are somewhat harmonized with the specifics of how this wholesale market power price curve evolves over the years up to 2033. The other chart on the left hand side, the upper one, is just a reminder of the variations that we've seen for an EU average for retail electricity rates, both the household and the non-household category, average consumption uses, so middle bands when it comes to Eurostat data. And then the other graph is just an illustration of what we're all suffering on a day-to-day basis, and certainly C&I developers, financiers, and corporate off-takers across Europe, right? Like the complete escalation of interest rates, which has really been a barrier to even more explosive growth the last year, the last 18 months. And obviously, as we see that trend of flatness from the end of or mid 2023 onwards, we know that pressure is alleviating a little bit. And of course, I do not have a forecast on interest rates, but we know that these are going to decline and will provide in some oxygen to the market. Here's what I call a concept map. Is honestly my favorite slide out of the entire deck, because it's what I always say whenever I'm telling this story to our clients or to the industry. We do care about numbers. We do care a lot, of course, about getting the numbers right. Hard to say whether they'll be 100% accurate, but what I'm really confident about, it's the trends that we are forecasting, the inflections, the ups and downs throughout the decade. And those are entirely based on a number of market fundamentals that I really wanted to summarize here on this concept map, and that I really also wanted to kind of divide between long-term drivers, or more of the tail end of the forecast, 2028 to 2033, and near-term drivers, so the next couple of years. Hedging against price volatility, you will notice that I tend to repeat that phrase like a broken record, but I think it's a fundamental value prop from the C&I developer side, and that has really been a very interesting narrative, and actually a very compelling story when it comes to the fact that there's seasonal volatility on top of obviously year-on-year variations of price, and protecting your OPEX from that. It's a fundamental part of the equation when it comes to really servicing corporate off-taker demand. We know that we keep seeing like deeper cuts, deeper declines to low module prices. Of course, these are completely driven by polysilicon prices in China. And of course, at the same time, I will say that, considering the conversation around onshoring of the module, specifically the solar module, the PV module supply chain back to Europe, and very recent developments like the EU forced labor ban, we know that these record low module price levels will not be there forever for the entire decade. Potentially, we will see like a percentage increase derived from adjusting to the new requirements, and being able to, as an industry, being able to really provide that traceability of module products, and being able to actually completely prove that they're not being manufactured with through any kind of human rights violations. But we think that what's going to happen on that side, by the way, and I do not have a specific slide on this because I really wanted to keep the conversation more market driven and necessarily don't spend too much time talking about the supply chain. But we do think that the solution to the forced labor ban, and to certainly some other trade defense measures, will have to come through sourcing a different polysilicon origin than what we're currently seeing as the norm in the market, but still manufacturing models and still assembling them to a large extent where we're seeing them assembled, which of course, as you all know, China is the main provider of manufacturing capacity right now. And we don't see that changing necessarily when it comes to module assembly. We think that what will happen is that polysilicon sourcing will change. So just a note on that, because that's currently our house view on everything that's happening on the module PV supply chain. And of course, that will have an impact on the C&I evolution of installations across the region. CapEx rebates. I will note emerging EU 27 markets, of course. If anything, like we've seen in Spain in December, and we're already seeing this year, and multiple other more mature markets, we think that the economics are strong enough, and certainly governments and even lobbyists and industry associations seem to agree that, like we don't even necessarily need to keep subsidizing C&I installations. Still, the economics are strong enough, but of course, in emerging markets, particularly in Eastern Europe, in parts of Eastern Europe, or in parts of Northern Europe, we're still seeing like very lucrative capex subsidies for C&I installations. I mentioned Spain, but there's actually a really interesting program right now in Spain for the industrial side of the market, and we can spend maybe a little bit more time on that if anyone has a specific question on that. What's really interesting about that particular government program at the moment is that not only it's in fact providing like a form of capex rebate, but it's also providing soft financing for a lot of C&I installations, and that's a really interesting incentive as well, in my view. EPBD central to the forecast. We need to talk about the impact, or what we foresee as the impact of the EPBD. Of course, in the case of C&I, as opposed to the residential component of the mandate, I think the stark difference between those two sides of distributed PV when it comes to the EPBD is that, of course, with C&I, the EPBD is also impacting existing buildings, existing real estate stock for commercial and industrial facilities, and that's a really, really important part of that differentiation versus residential PV, where it's really limited to new residential buildings. I think that the impact will be a lot more profound, but we also need to understand that the component of the EPBD that relates to new C&I buildings, in that case, it's actually quite limited when it comes to translating that to actual annual increments in C&I capacity for every specific EU member state, because roughly the rate at which your your industrial real estate stock will grow on an annual basis, it's in many markets not even 1%. So when we translate that to growth of C&I installations, you can imagine that the impacts are relatively nuanced or minimal. I'm conscious of time. I have a lot to cover today, and I do want to share some of our country-specific outlooks so you can see the main differences between across markets, because obviously, you know, it's all a case-by-case basis, and the dynamics, all of these dynamics, you know, are quite nuanced or have very important footnotes when it comes to, you know, Germany versus Netherlands, et cetera, et cetera. But before we jump to that, long-term drivers, the switch to time of use rates, I think will be a really important part of what happens to C&I demand as well. And that it's not just the transition to dynamic rates in a lot of markets that, in a lot of EU markets that did not have them before. Of course, UK is the exception because we've incorporated that for years now. It's a very important part of how a lot of C&I off-takers are working on minimizing their energy spending every month. Belgium being another good example of that. But the fact that we're going to see time of use rates as the blanket market design for the entire continent, I think will bring a lot of additional strength and momentum to C&I installations, because correlated with energy storage and in conjunction with energy storage, that really increases like the value prop, and it makes it stronger for corporate off-takers. Being able to, this idea of being able to harmonize peak generation and patterns of demand at the times where it makes the most sense to consume purely based on economical terms. Like I was saying at the start, these numbers do include collective residential PV / energy communities / collective self-consumption. And obviously there's nuance there. It could be different types of installations, but the idea is that they're not just servicing commercial demand specifically. They're obviously incorporating residential PV. Unfortunately, I did not join yesterday, so I'm not exactly sure of whether we covered collective residential or to what extent we did. Again, feel free to use the chat to start a dialogue specifically on the energy communities segment or collective self-consumption. But the idea here is that some of the strongest, largest markets for residential PV in Europe are actually more apartment-based than detached homes. And of course, the residential PV segment, that ecosystem, as we've known it for the last 20, 30 years in Europe, has been completely limited to detached homes, right? To detached houses, and has not been able to tap into residential PV. I'll give you two stats very quickly to cover that and why it's fundamental to my forecast as well on the C&I side, purely because we segment by system size. 65% of German residents live in apartments, not detached homes. So effectively, once we can really tap into that through energy sharing, through like residential PV installations, larger residential PV installations on large rooftop surfaces for apartment buildings or energy communities,
Uh,
perhaps in an, yeah.
Sorry to bother you, but yeah, we need to finish.
Yeah, I'm aware. Sorry, Anna. Well, basically, feel free to continue that conversation on the chat, but still fundamental to our forecast. And I'll stop going into all the different barriers because you've probably already seen those on the slide. Very quickly, just adding some color to the specific curves that we're going to see throughout the decade for some of the largest markets. France, of course, as you probably all know, that's one of the most mature C&I markets in Europe. So is Germany. So it's understandable that AAGR it's going to be relatively lower than the regional average that I was presenting before. When it comes to the Netherlands, even more. Very, very fresh news as of a couple of weeks ago. We do know that there was a reversal to that Dutch Parliament decision on February on keeping it mirroring. We know that that is actually going to be confirmed, that it's going to be canceled or transitioned to a less beneficial compensation regime for grid exports in 2027, which explains what's happening during that year, or explains like a trend of the acceleration in the Netherlands. We see additional growth, though, that it's because of all the EPBD mandates. We'll cover those in detail in the rest of the, I think there's a session from Jan on policy, and I'm sure he will touch on that. Again, if we're thinking about more emerging markets, like the case of Poland, that AGR, it's almost doubling the regional average. Not so much for Italy because it's more saturated. One specific thing about Italy, as well as Spain and Portugal, the frameworks for energy communities and collective residential PV are particularly good and like clear, or have better distance limits than other markets in the region. So in the case of those, my bet on energy communities, it's even stronger than in some of the Northern or Western Europe markets. I will really leave it there. Just have a couple slides really summarizing a lot of what's happening with mandates. It is not just the EPBD, right? We have very important markets in the region, like France, which has a national market, a national mandate for commercial rooftops already in place. We have the example of Flanders that I think John will probably cover later on the day. And we have 7 German states that are actually already, as of 2023, mandating rooftop installations for a lot of commercial off-takers in the country. So just you can see these in more detail because I know the slides will be distributed, and I will leave with a reminder of what the EPBD timelines look like. When you look at this slide and you see some of the country charts, you will clearly see a correlation between all the different deadlines for implementation and some peaks in the forecast that I had just presented. I will leave it with a little bit of kernel from me on the EPBD. Of course, I think the mandates that pertain to obviously government buildings, it's sizable. It's a sizable chunk of rooftop surface across Europe. I mean, anecdotal when it comes to the total, but it's still sizable in terms of total square meters, as well as commercial and government buildings that are undergoing a major renovation. And that is the first timeline really as of December 31st of 2026. I think that those components of the mandate will be the most impactful. There's some numbers from Solar Power Europe that have been circulating for the last month or so. I think they're predicting between 150 to 100 gigawatts like for Europe as a total in terms of additional installations completely linked to the EPBD mandates. My view, it's still under development. I'm still making some calculations. My view is limited to the markets that we do cover, which are not the entirety of EU27. I do think that that final number will be more conservative than theirs, potentially around 20-30% more conservative, just based on my understanding of the response that we're going to be seeing from member states. And I'm really ending here, final 10 seconds, but a key to really think about whether the EPBD will be more impactful or less is to really assess it on a market by market basis, because Unfortunately, it's not a EU regulation. It's a directive, which means that there's leeway in how the different member states can transpose it and how they will transpose it, and the level of loopholes that they will have, and the extent to which they will actually sanction any owners of corporate or industrial buildings that are not cooperating or not following the rules, right? So that's very important detail, and I think that that will deflate the impact of the EPBD in some member states. Totally understand, Anu. Yeah, thank you so much, and I'm sorry about the initial issues getting to share the screen. Any questions? I'll be here online to answer.
Yeah, we are really overshot. So if you could please, answer the questions in the chat.
I will.
Thank you so
Thank you
much.
so much.
Yeah.